This is not financial or investment advice. The information provided is for educational and entertainment purposes only. Please always do your own research and consult with a licensed financial advisor before making any investment decisions. Thank you, guys.
Hello, everybody. Welcome back. And today we're going to be talking about why real estate is the best. Yes. And more specifically, how assets kind of float as the money supply increases. Part 1, inflation. While cash shrinks, real estate floats and it grows. When the government prints money like it did in 2020, prices don't just go up, your dollar actually gets devalued. So it's not that everything else is getting more expensive, really, it's that the actual purchasing power of your dollar is getting weaker. So to buy the same good, you need more of that dollar. You can hold on to cash, but it buys less over time. Or you can hold on to assets and they float. Real estate floats because it is a real thing. It costs more to build, it generates rent, and it's priced in dollars. So when the dollars get weaker, the price gets higher. And an easy way to conceptualize this is that you can kind of view things as a hardness to how hard they are to create, right? This is why gold is a great store of wealth, right? It's a hard asset. Gold is finite. It can't be printed or created by governments. When the money supply increases and the value of each dollar falls, gold tends to retain its purchasing power because it's not tied to any one currency, right? You can kind of think of it like this, right? If you could buy a suit with an ounce of gold in the 1970s, you can still buy a suit with that same ounce today, but try doing that with 35 bucks, right? Which was the price of gold back then in the 1970s per ounce. Gold is universally recognized as a store of value. In times of high inflation or economic uncertainty, like during the 1970s or during COVID, investors flood into gold to protect their wealth, driving up its price. That demand surge helps gold float upwards while fiat currencies are sinking. Another nice thing about gold is that it has no counterparty risk, right? What do I mean by that? Unlike stocks or bonds, gold doesn't rely on a company or a government to maintain its value. Like in the case of bonds, it requires a government to pay you back your investment. But what if that government fails, or whatever, or something like that? It's not somebody else's liability. During inflationary periods, when trust in central banks or governments is low or declines, gold independence becomes an advantage. The same logic applies to real estate. You cannot create land. So why am I sitting here talking about real estate and not gold or preaching real estate? Because gold doesn't produce anything. It just sits there. It's a store of value. Real estate also floats during inflation because much like gold, you can't print real estate. There's only a finite amount. And to even take that thought further, there's only so much desirable real estate in the world. If you think about Malibu or Santa Monica, for example, people love these areas because the climate is incredible, because it's beautiful, a whole bunch of other reasons like that, right? There's only so much real estate on the planet that is like that. The reason real estate is better than gold, in my opinion, is because real estate also floats during inflation, but it adds leverage, rent, and tax benefits. So it's often a more dynamic inflation hedge than gold. So one, inflation or macro forces that are out of our control. As money supply increases and purchasing power drops, hard assets like real estate, like I've been saying, tend to float up in nominal price, right? Construction costs also rise, labor, materials, which raises the replacement cost of homes. So you can't even replace the same home for the same price as money supply increases. Driving prices, yet again, higher, right? And then investors flee devaluing cash into inflation-resistant assets like property, pushing demand. And then 2, local demand shift. And this is the human behavior side of real estate. If more people want to live in an area because of jobs, weather, schools, walkability, etc., prices rise due to inflation. This is the location premium increasing due to desirability, amenities, or lifestyle. A good example of this is how Austin and Miami boomed during COVID because there was a lot of people that wanted, more freedoms or whatever it was that made them move to those areas, right? So at the core, real estate prices either go up because the dollar is worth less or the land is worth more. Inflation and human behavior. Those two forces explain most of it. This is also a nice segue into the wealth gap that COVID created. Between 2020 and 2022, US billionaires gained over $2 trillion in wealth. Meanwhile, millions of families lost jobs, savings, and homes. The difference is that the rich own assets. They don't store their wealth in cash. They store it in stocks and in real estate. So when the money supply ballooned, they didn't get crushed, they floated upwards. So this is the money supply chart, right? And you can see these little shaded areas are the times that we had recessions or inflationary periods or something like that. And you can see 2008 right here and how there was like a tiny little bump there. And then you look at the right, or I don't know if it's the left for you guys, but you look at 2020 and we saw just the hugest increase in money supply. So what did that do to people, right? It kind of goes back to that expression where it's like the rich got richer and the poor got poorer. Since, the wealthier individuals in this country tend to be invested into assets, into equities, into things like real estate and gold and stocks, their money didn't get devalued as much as people who aren't invested in that. So if you were somebody who's living paycheck to paycheck, or maybe not even living paycheck to paycheck, and you just buy groceries, whatever, everything else got more expensive and your salary couldn't account for that. Meanwhile, people that were invested in equities and hard assets, they saw those assets grow like crazy because we had just such a sharp increase in money supply. Another thing that makes real estate especially powerful is that it gives you leverage. You can use somebody else's money to buy it. This is like putting 20% down on an income property, for example. And if you borrow at a fixed rate, inflation actually works to your advantage. Right? It actually helps you out. It helps you out because your fixed loan becomes cheaper in real terms as inflation rises. So real estate's really a triple whammy in that sense, right? Because you can leverage, you can use other people's money to buy it. Debt gets devalued. So the debt that you do put on the property ends up being worth less over time, and rents rise. If it's an income producing property, rents often go up with inflation. Closing thoughts. So why is real estate the best? Because prices rise when dollars fall and when people move. Inflation pushes it up, human behavior pulls it up. It's a flotation device in a sea of sinking cash. If you're not thinking like an asset owner in this economy, you're really playing defense in a game that rewards offense. You're swimming upstream while other people are walking on the riverbank up the stream, And so yeah, this is kind of a short little pro case for why real estate. It is an incredible asset, and I hope you guys enjoyed this explanation. And if you have any questions, let me know down in the comments below, and like and subscribe. Thank you guys. See ya.